Hello, this is Lance with Verivest, and today I have with me Max Sharkansky with Trion Properties. How you doing, Max?
I'm doing well. How are you?
Doing good, man. Yeah, thanks for joining me.
Thanks for having me.
Yeah, why don't you share a little bit with me how you got into the real estate business? What attracted you to commercial real estate, and kind of what was your journey on your way to eventually forming Trion Properties?
What I liked about commercial real estate is it's a tangible asset. And I was graduating college right when the stock market was crashing in 2000, 2001. And, finance at that time was super sexy, but it was all falling apart. And I loved the idea of real estate. So I wanted to get into real estate, and I've been doing it ever since I graduated college. I got a job, my first job out of college at Marcus and Millichap. I started out as an intern, as the salesperson internship program. So I was like a paid intern protege to a senior broker through the Marcus and Millichap program. And I did that for a year and started brokering. I was brokering a little bit also while I was, in the internship program, and I was there for almost 5 years. My fourth year there, my partner Mitch and I decided to start buying. Mitch was working on the finance side at HFF, which is now JLL. It's been acquired. And we scrounged together a few bucks. First, we used our own money. We bought a small 12-unit deal. Then we started to raise money with our colleagues at Marcus, at HFF, friends, family. You know how it is. You dial every phone number in your Rolodex. And that's how we started syndicating deals. We bought our first couple in '05. We left in '06. We continued to buy into '06. And then we left at the end of '06 to start our own shop. We aggregated a small portfolio in the last cycle, and we sold most of it in 2008 prior to the crash. And we kind of saw the writing on the wall. We saw rents starting to trend down. Unemployment was ticking up. The first round of subprime lenders had started to fold. So we switched our strategy from buying value add and multifamily to targeting non-performing debt secured by multifamily. And it took us about a year and a half for our first closing. But in '08, as we were selling, we were calling the banks. And in '09, we bought our first few notes from East West Bank. And then from there, it snowballed. And we did about 20 deals during the downturn in 9, 10, 11, 12. And then coming out of the downturn, we just went back to the value add business. But we've just scaled it. So we bought thousands of units, sold thousands of units. We currently have about 1,600 in portfolio. We've grown out of LA. We started out just like everybody else in our own backyard. And we started buying in San Diego and Northern California, Sacramento, and the Bay Area. And as you know, we're in Portland, Oregon, in your neck of the woods. And now we just closed our first deal in Denver, Colorado. So right now in portfolio, we've got about 1,700 units, roughly, and growing. So that's our story.
Oh, that's great. Yeah, a lot of Marcus and Millichap alumni.
There are.
It's a great place to cut your teeth. I mean, HFF as well, right? Yeah, that's it's a good combo. So, but for you guys, like, how do you source your deal flow? So, I mean, how do you find those opportunities that kind of fit, your sort of acquisition criteria?
It's really all through the brokerage community. So we source our deal through the brokerage community. What we target is a 70s or 80s vintage product is kind of our bread and butter. It's usually our ideal acquisition is something that hasn't been touched in 10, 15 plus years. It's got legacy ownership. They have a very low basis. They've got a ton of cash flow, low debt, so they don't need to put much money back into the asset. So we'll buy something like that. We'll do a full renovation on it, full common area reset, do all the amenities, spruce up the interiors of the units, and really modernize the asset. So what we try to do is we try to have the best Class B plus assets in the marketplace. Mm-hmm. And that makes us significantly more competitive than the comp set and usually allows us to achieve a little bit of a higher rent. So that's how we approach it. With the brokerage community, what I think helps us win deals is we have phenomenal terms, and we'll do a lot of work up front so that we don't need as much time in DD, and we can maybe put some hard money up day one. And a lot of groups aren't willing to do that. Whereas we'll go send a whole crew of guys up there, and we'll even send the inspector up there, and we'll have like a light property condition report before we even sign the contract. So we're able to get really competitive. Our philosophy is we'd rather overterm than overpay.
Yeah.
And that's what we have to do that. We have to spend money up front.
Yeah, no, that makes sense. So, you mentioned a few of the markets, but maybe you can kind of touch on some of these markets that you do look to do deals in that you really love, that you're really bullish on, and maybe why.
Sure. So we've been really, really bullish and done very, very well in the East Bay. And the investment thesis with the East Bay is a lot of people can no longer afford to live in San Francisco. And even people who can afford to live in San Francisco don't want to spend $4,000 a month for a small apartment in a 100-year-old building. And a lot of people will come across the Bay, especially if you're close to BART, which is the train system, the subway system in the Bay Area, and they'll live at a significant discount in a nice renovated property that feels new. So that thesis has proven out very, very well. We were in markets like San Leandro, Hayward, Fremont, which is the home of Tesla, and we're all along that whole 880 East Bay corridor. And we get a lot of people who make 100,000 plus a year, average household income, and they can technically, by the numbers, afford to live in San Francisco. They just choose not to. They'd rather hop on a BART and be in downtown San Francisco in 25 minutes.
Yeah.
Or in Fremont, our properties in Fremont, you're the last exit before you enter Silicon Valley. So, we're in this affordable pocket that has had a lot of growth. And now, for example, we're also looking at Denver. We've been trying to buy in Denver for the last year and a half. And we finally closed our first acquisition. And the investment thesis with Denver is similar to what we just explained in East Bay and San Francisco, but on a more macro national level. You've got people moving from California, from New York, from Seattle, from Boston, from much more expensive coastal markets into places like Denver and Austin, where you have a phenomenal quality of life, great jobs, and it's more affordable. So Denver has seen a tremendous amount of growth, and we think they'll have a tremendous amount of growth for the next 5 to 10 years, and we want to be a part of that growth.
Yeah, that makes sense. So, now that you've done this for a long time and you made it through that last downturn, in fact, kind of capitalized on it. Have you found yourself, do you have sort of this overarching investment philosophy? Like, is it something crystallized in your mind? Like, this is kind of how I approach this, or maybe it's just as simple as like how you kind of, determine whether this is a deal we're going to do or not. Outside of the things you've already mentioned.
The only thing that's constant is change. And I think clearly right now with the pandemic, we're going to be going through a lot of change, especially with the work from home, remote working, the way people live, the way people work, affordability, what's happened in the cities. So, historically, what we've done this cycle up until COVID is we go to the major markets, we're in the first ring suburb, or we'll go to high growth markets like Portland and Denver, right? Which are seeing a lot of people move in because of affordability. So some of the things we've been discussing internally and with some of our big investors is now we kind of got to figure out how people are going to scatter all over the country and where those hotspots going to be. And we think there are already markets that we're already looking at, like Austin and Denver. And we're now looking in the Southeast, right? Like, so we've been exploring Tampa, and we're looking at the Carolinas, specifically like Charlotte, Raleigh, because a lot of people from the Northeast are going to be moving into the Southeast, which has already been happening, but we think that this will hasten the acceleration of that. And same thing with the West. You might have some people moving out of San Francisco and probably into LA. And if they want something more affordable than LA, they'll probably be moving into Phoenix and some other markets, and Austin and Denver. So that's what we're looking at over the next 5 years.
Got it. So for you guys, as you know, there's obviously lots of people that are out there buying value add multifamily or whatever, but like for you, you know, what are those key ways that you generate value post acquisition? Like sort of your bread and butter ways of saying, here's how we're going to, you know, turn this, you know, this asset and increase sort of, you know, forced appreciation or whatever you want to call it.
A few ways. First of all, we substantially physically improve the asset. You've seen some before and after photos. I'm sure they'll be up in the portal. We are taking Class C assets that haven't been touched in decades a lot of the time, and we're improving them significantly. We're spending millions of dollars modernizing the asset, and it works. And we're able to improve the gross rents significantly. Then we're doing some other things also, like RUBS, which is recapturing utility reimbursement. We're doing improved marketing so that we can push rents. Just professional management, superior management.
Yeah.
And all those things really optimize NOI, and then we can refi and then ultimately sell at a much higher level.
Yeah. I mean, I think I love the branding work you do. The before and after is stark often with these and just the trendier names and all that you give the feel like there's a very intentionality to the giving it the property, you know, its own life, like its own brand, you know, almost. So
yeah, thank you. We've got some people in house that are really, really good, and I think that's one thing that separates us from a lot of other sponsors in the industry is we are fully vertically integrated. We've got a great project management team, an operations team, and they're doing all this stuff like right as we're buying, you know, right before we close escrow, we're figuring out a new brand, a new logo, a new website. We're doing all the property management and execution in-house. So all these things, because we're not outsourcing to a branding agency and to a property management firm, we're able to do these things at a much higher level.
Mm-hmm. Yeah, so there's a good segue then. I mean, kind of touch on those key players that are, you know, besides yourself. I know you've got, you know, your partner Mitch, and he's got a very specific role, and you know, Andrew, and maybe just touch on some of these the key folks at Trion that kind of make the magic happen.
Sure. So project management, we've got Max Sanchez and Simon Leonov. They do a great job, and they actually do a lot of the brand management, and they work with the web team, and they're kind of like a Swiss Army knife where they're really good at design and understanding how design drives rents and makes the community more valuable, both on the branding front and the design of the units and the design of the asset. And they're phenomenal. On the operations team, we've got George Velasquez, Carlene Decker. We just hired somebody else. So Carlene does all the marketing and leasing, and she's working with the on-site teams daily to make sure that all the rents are priced correctly, that we have the correct marketing in place, whether it's apartments.com or we're doing our own Google ad campaigns or Facebook campaigns or whatever it is. So we're very aggressive on the marketing. And then George kind of oversees everything. He's just done a phenomenal job overseeing our whole portfolio on the West Coast. And of course, we have an accounting team. We have an acquisitions team. Farhan Mood runs our acquisitions. And we've got some other folks on the acquisitions team and an analyst, depending on what market we're covering. And then we've got an accounting team with a controller, Rudy Baromand, and we've got 2 senior accountants. So yeah, we've got a fully built out platform.
Yeah, that's great. Well, cool. Well, thanks so much for taking the time to kind of share a little bit about Trion Properties. You have a great day.
Thanks, Lance.
Appreciate the time. Yep. Bye.